a lot of what I'm doing is studying currencies and looking at how currencies are changing and how currencies are reacting to some of the things that are happening politically and also to some of the hype. And so just to first take a quick look at what's happening with the dollar. So the dollar has been incredibly strong this year. And one of the things that, we want to start out by looking at where agricultural commodities are in relation to a broad basket. So broad commodity index, that includes energy, nat gas, diesel, crude oil. It also includes all different types of commodities, whether it's metals, gold and silver, as well as coffee, sugar, cocoa, and of course the agricultural commodities. So due to the strength of the dollar, the broad commodity index right now is down 5 1/4. So beans are down a little bit more than that, quite a bit more than that. And corn is actually, it's only down 2.5% on the year if we go back to the first of the year. So the first thing I want to point out is that the strength in the dollar is having a direct impact on commodity prices. And it doesn't matter if they're the agricultural commodities that have been more directly impacted by the tariffs or if it's just a broad base. Prices in U.S. dollar terms are down due to the strength of the dollar. So I think that some of the currency fluctuations, we can look at those as being a little bit more powerful than what we're seeing coming out of the tariffs. And the narrative that these tariffs are absolutely, devastating and it is causing pain and tariffs are not good. But one of the things that, one of the reasons that tariffs are generally frowned upon in the economics community is that you have this tit for tat, where when one country puts a tariff on some goods against another country, then that country returns the favor, and then we have a loss in economic activity, and both countries are worse off. Now, what can happen, though, is, and what has happened in the U.S., is that we haven't done a good job of returning the favor. So kind of a counter-argument here would be that what the Trump administration is doing is really trying to even the score and making up for the fact that most, especially with countries in the developing world, the trade agreements are not, they're not fair. And I think that that's what, at least in theory, the Trump administration is trying to do. Obviously, agriculture is the victim here, but if we look at agricultural prices compared to other commodities, compared to gold, and compared to currencies, we'll see that the impact really is not that large. So if we look at priced in euros, corn is actually up slightly on the year. Beans are only down 5%, and the broad commodity index is only down 1%. So when we take out the strength in the dollar, we see that there hasn't actually been as drastic of a move. So when we tease out how the dollar has strengthened, we see that the move in the commodity prices has not been that substantial.